Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping back down into the world of Bitcoin, taking a look at the most recent price action and what we think is likely to happen next. Now as I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, right? Tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord guys, what you're waiting for, check it out, linked in the description down below. And yeah, let's jump right down into the video here. So BTC paired up with USDT on the BitGet spot exchange 1 hour time frame. Following on from yesterday, you can see that we did invalidate. We basically broke upwards, kind of as expected with the FOMC, but we were first initially thinking that we were going to move down towards our target range between 28,544 and 28,745, right? The initial thoughts were that we would break down, finish off our fifth wave structure, then move up after the FOMC. However, it looks like it held up really well, and we actually just pushed upwards. So we hit the invalidation, as in we couldn't cross wave 1, which we did, so therefore we're no longer at a 5-wave count to the downside here, and there is no fifth wave movement to this downside either. This will basically mark it as a bit of an unusual zigzag, but a zigzag nonetheless, and a complete structured move. Okay, this now looks like we're moving on upwards, and there are a few interesting things right inside here as well. So let's start things off with the obvious. So if we draw a trend line in, we can see that we are in higher lows, and of course we are in higher highs as well. We'll draw this in here and just snap that up there. There we go. Okay, so higher highs and higher lows. Now, I know the uneducated retail investor might think that that's a really good sign, positive sign. Unfortunately, it's not. It's actually quite a bad sign. And the reason that this is bad usually is typically that higher highs and higher lows have a tendency to want to break on down. For example, you cannot move continuously to the upside for a long period of time. Now, this is on the 1 hour time frame, right? So we should be expecting this to run its course soon. I still expect us to be retesting the equilibrium and the 200 EMA. Okay, I don't think we're done here yet. It's possible that maybe we wick up and tap into the higher range once more before we break on down from here. Okay, but it's an inevitability that this will lead to a break to the downside. Now, when we start to think about this, we can see that we're above the 50 EMA and below the 200 EMA, and we're coiling up interestingly here. Okay, so what we want to do is we want to think about where our positioning is on our stochastic RSI. Although this doesn't relate to price, it shows us that we've run out of momentum to the downside, and we're now shifting that back to the upside on the 1 hour time frame. On the 4 hour time frame, we're already in an overbought area, so we want to be a little bit fragile about that 4 hour time frame, thinking that potential moves to the upside are limited in the way that they can go. Now, essentially here, from an Elliott wave theory point of view, and the other reason that I'm very confident a breakdown is likely to occur here, is that we have an overlapping structure, okay? Where all of these candles are overlapping, it tells us that there isn't a trend-based structure to be seen here. It basically means all of these moves are short-term, and the directional move to the upside is actually a continuation pattern where we'll actually see a breakdown from this area. So although positive in the fact that we've kind of, pushed upwards here and we've seen a little bit of green in the market, it essentially doesn't look like it's going to last all that long. Now, as you can see, we're still in a bearish structure. Okay, so all the way from over here, you can see that we had this bearish change of characterization. We had a break of structure to confirm it, and we've had another break of structure to confirm it. Okay, so we sit in this position knowing that we are still in this bearish structure and we haven't broken out of there. There's no new change of characterization to say that Bitcoin is now bullish on the 1 hour time frame. Okay, so it does look more and more likely that we're going to see another continuation of trend, or BOS, to the downside in the coming days. Okay, so that's kind of where that currently sits in my mind here on BTC on this 1 hour time frame. Essentially, over the next couple of days, we're probably going to see a new local low. Now, moving over into our daily time frames, we can see that things are still looking good, and we are still looking for that break upwards. Okay, we are still targeting out and looking for $34,000 to $35,000. Okay, that hasn't changed. The only thing here that is kind of changing is that we're finding, or trying to find, support on our 50 EMA. We're still oversold and we still have this potential move to the upside, but we're probably going to end up seeing some volatility beforehand. Now, like I was saying earlier, where we have the higher highs and the higher lows and they have a tendency to breaking down, if we adjust our trend lines here, because these things are very subjective, if I would go ahead and move these across to here and from over here as well, you can see, maybe we just haven't tested that higher range just yet, the idea of lower lows and potentially lower highs. In fact, if I did that, you would see it as a descending wedge. Okay, so again, however you tend to draw your trend lines, you're going to get different results. So just bear that in mind, right? There's many different ways of interpreting this, which is why I don't like trend lines overly that well. But as you can kind of see, we're coiling into something. And I think on this daily time frame, although we might break down into a new local low, essentially we are going to be looking for that break to the upside. Now, why do I think there's going to be a break to the upside? Well, here we can see that this is a continuation pattern, potentially a reversal one as well, so I can't rule it out. But for the most part, you know, if we take a look at our CME gap, right up here, it sits at 34,455 to 35,180, and we've got one down here at 20,330 and 21,110. Right, I think we're going to break upwards, considering our momentum on our 1-day chart is supporting the idea of a break to the upside, and then once that's complete, we break down towards our 20k area. A lot of volatility to be expected within that range. Now, within this, you can see that we're overbought on our monthly time frame, and if I come to the weekly, we're somewhere mid-level. Daily, we're oversold, right? But then 8-hour we're overbought and 4-hour we're overbought. So for the most part, it's looking like there is going to be a break to the downside, but we may have to break upwards beforehand. Okay, not a guarantee, but you know, it's kind of one of those things where we can see things potentially starting to kind of coil up now. We might get this break to the upside, and we'll know this as soon as we start to count the internal structures on those smaller time frames. But for now, it looks like on our smaller time frame, we'll be looking for a short move to the upside, nothing major, and then another break to the downside, where I suspect we'll come down into this fair value gap. This one's sitting down here at 28,482 to 28,761. Okay, but yeah, we'll see how things play out. The good news is we've broken out of that structure for an impulsive movement, meaning that we just have ourselves here a structured move that looks more like a WXY. W, X, and Y, like so, but still possible that we have another move here for another zigzag pattern, and that zigzag pattern could be turning this into a W, X, Y, X, and Z. So just bear that in mind. But for the most part, that's kind of where I have this today. I think I'm going to leave the video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description below. Until the next one, though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.